Fine. What they are saying, an entity has purchased an asset for 1st January. They made very clearly. Depreciation is what? Depreciation is on a straight line method. SLM means straight line method. Okay. We'll use this. Now, how much is there? They are talking about straight line method of 6,000 per month, per annum. Okay. 6,000 per annum. Life is how much? They say life is going to be 4 years. He said life is going to be 4 years. Residual value, they will mention very clearly, residual value is going to be 0. Is it? Now what happens? This has happened like on 1st of January 2005. Okay, on 1st of January 2005. They have reviewed, annual review of asset life was undertaken, and the remaining useful life is how many years? It is 4 years. See the thing. They have taken it on 1st January, purchase asset on 1st January, straight line method this much. How many? First they assume it how much? They assume it for 4 years. Is it? They assume it for how many years? 4 years. Now, they assume it for how many years? 4 years. Is it? 2005, 2003, 2003, this is 2004, is it right? This is 2004 and this is 2005. After 2 years, they have said that no, this still 2 years are there, okay? Still 2 years. They said that the remaining life, the remaining useful life was estimated at how many years? The remaining useful life is estimated at 4 years. Means how many total years are there? If you take into total years, how many total years will be there? The remaining useful life, is it right? Means 2 plus 2. Understand the point? Remaining useful life means this is 2 years and this is how many years? This is 2 years. The remaining useful life from this year point of view. On 2005, the remaining life is how much? The remaining life is 4 years. Is that the remaining life is 4 years? What they are asking? The financial statements for the year ended. What is the depreciation charge in 2005? Is that? What is the depreciation charge in 2005? In simple ways, it's in the simple ways, that's what it says. See, now you see the thing. You have the cost. How much is the cost? Cost is 20,000. Okay? Now, depreciation, straight line method for 2 years. Straight line method means it will be same. Okay? It will be same. The amount will be same. How much is there? 6,000 times 5,000 times 2. Okay? It comes to how much? It comes to 10,000. Now, what is the remaining amount? The remaining amount is 10,000. Is that this remaining amount is called as a carrying amount. After depreciation, any time after depreciation, the remaining amount is going to be used as a carrying amount. We will not say remaining amount. We say it is a carrying amount. Now this is the carrying amount. After how many years? After 2 years. Now, what is the remaining life? Remaining life is how much? They have remaining. I will not use the word remaining life. I will use the word revised life. How many is the revised life? 4 years. Okay? How many is the revised life? 4. They are asking us 31st December 2005. Okay, 31st December 2005. 2003, this is 1/1/2003 to 12/2003, 1 year. 12/2004, 2 years. Is it 12/2005, 3 years. Is it 12th? What they said, when they have valued on 1st January 2005, okay, means they have valued it when they have valued in 1st January 2005, okay. This is 1st January 2005. They have revalued. Remaining life is going to be how much? 4 years. Now we have to calculate the depreciation. What we have to calculate depreciation from 1/1/2005 to 31/12/2005. Remaining life will going to be how many years for? Now what is the carrying amount? This is the carrying amount of when? This is the carrying amount of 1/1/2005. Is that this is the carrying amount on 1/1/2005? Because why it is carrying amount? They have revised. When they have revised the value of the asset, they revise the asset. You are there. You have revised your value of the asset at the beginning of the year. Now we want to calculate what? We want to calculate the depreciation. Depreciation for 1/1/2005 to 31/12/2005. Okay, 2005. Now what will happen? The carrying amount, is it right? The carrying amount divided by the revised life. Is that the carrying amount divided by revised life? What is the carrying amount? Carrying amount is going to be 10,000. Revised life is going to be how much? 4 years. Depreciation will be how much? 2,500. Is it clear to you?
Doctor, can you please repeat it?
See, what happens? See the things. See the thing. First they have purchased the asset. Okay, when they have purchased the asset, what is the rule? They say they purchased the asset on 1/1/2003. Okay, when they have purchased the asset, they thought that the life is going to be how much? 4 years. Fine. Okay, good. How they have calculated? They have calculated on depreciation on straight line method. Okay, they have calculated depreciation. They already told that it is going to be 5,000. Sorry, I have written wrong. It has to be how much? It has to be 5,000. How you got 5,000? 20,000. Is it right? Rule is there. Is it right? Depreciation is equal to cost divided by life. Cost minus residual value. Is it? This is depreciation. What is the formula? This is formula for straight line method. Is it? Now you don't have a residual value. 0. Life is how much? 4 years. Is it right? Life is how much will get depreciation? 5,000. Okay. Now everything is going fine. But what happens after 2 years? After 2 years on 2005. After 2 years, 1st January 2005, they said that no, we are going to revise the life. Okay, we said that again the life will not be for 4 years. The life will be how much? From this date. Okay, from this date. Which date? From 1st of 2005. The remaining life, they made very clearly, the remaining life, useful life is going to be how much? It is going to be 4 years. Means, see the things. Means, first they said it is 4 years. Okay, then after 2 years, is it right? After on 1st of 2005, they said that this is going to be 2 years, and another from here to here, it will be how much? It will be 4 years. Now when we are changing the life, is it right? When we are changing the life of the asset, we also have to change the amount of depreciation. We have to change the amount of depreciation. Now first we have calculated how much we have done. This is the initial, is it right? This is the initial measurement in the beginning, is right? Initial measurement. Okay, for how many years? For 2 years. Is it? I am writing from 1/1/2003 till 31st December 2004. Okay, they have calculated this. Okay, they have calculated how much they have calculated. They calculated this amount. Okay, fine. Okay, that's okay. We are clear about. But later on they have changed.
Doctor,
Yes.
Doctor, why we put 1st of January 2003 till 31st December 2004? And in the question they said for 4 years, no?
They say for 4 years. Yes, exactly.
4 years.
Now, why we say is, see the thing. Now, divide, okay. This is first sentence. Okay, this is first sentence. An entity purchased an asset 20,000, okay, 20,000 on 2003. When they have purchased it, one minute. Okay. When they have purchased is 1/1/2003. Are you clear about this? Is it? When they have purchased it, 20,000. Okay. Now, what they say, this is the depreciation they have said. Are you clear about this?
Yes, it's clear here.
Okay. Means,
Yeah,
okay.
yeah, doctor.
Okay, fine. Now, depreciation till 31st December 2003. How much is there? 5,000. Okay, 5,000. 15,000 is there. This 15,000 is called as a carrying amount. Okay, carrying amount. Now, depreciation, straight line method. Okay, depreciation. Depreciation for second year, 2004. How much is there? 5,000. Okay, this is going to be how much? 10,000. Okay, this value is there for when? This value is there on 31/12/2004. Okay, 31/12/2004 or 1/1/2005 are same. You will agree with this?
Yes, doctor.
Okay, you will
Yes.
agree with this? Fine. Now, here how many years has been over? 2 years has been
years.
over. Are you clear about this? This is the year 1. Is it right? This is year 2. Okay. Now, on 1st January 2005, they say that remaining life is how much? Remaining
4
life
years.
will be how much? 4
4
years.
years.
As per rule, the remaining life will be how much? Only 2 years. Is it right? As per the rule, they have taken it for 4 years. They have, see, they have calculated depreciation. See, what is the life? The life is 4 years. Actual life, I will put like this. The actual life is 4 years. They have calculated for 2 years. The remaining life is how much? The remaining life
2
is
years.
2
2
years.
years.
Now what they have said on 1/1/2005, they have changed. The revised life is going to be how much? The revised life is going to be 4 years.
4 years. So, Mister, it's mean after 2 years they decide to revise it for another 4 years.
Remaining life, not another. Another means plus.
Yeah. Remaining life.
Remaining life. Okay, words are remaining means only 4. Next 4.
Yes.
Okay. Now, what is the carrying amount? Always we have to take carrying amount is how much? 10,000. Okay. Now we have to calculate revised depreciation. Revised depreciation for the year 1/1/2005 to 31/12/2005. What is the formula for that? You will have the carrying amount. Is it right? You have the carrying amount divided by revised life. Carrying amount is how much? Tell me.
10,000.
Revised life is how much?
4.
It comes to how much?
2.5.
2,000.
Is that this is revised depreciation. Okay, revised depreciation. How much? Revised depreciation per annum for the year. How much? For your understanding, for the year how much? For the year 31/12/2005. Are you okay about this?
Yes, clear.
Is that see the whatever they mention as per, see, accounting is very simple. As per the dates you have to do the calculation. That's all. Nothing is there. Okay. As per the dates, that's why they say revised depreciation is how much? 10,000 divided by 4. It comes to 2005. This is the first condition. Okay. What is the second condition? What will happen? Is it right? What are the things will happen? See, you are buying a car. When you buy a car, take an example. You are buying a car. If you are buying a car, for first 4 years, they will give you a full insurance. Then after 4 years, they will not give full insurance. Now they say in some cases, till 10 years, they will give full insurance. After 10 years, they will give only third party insurance. Is that? Now what happens? You have the car. You don't want to sell. You want to continue it. But what will happen? You have to change something. Major part. Okay. Once in a life. Once in a time. Inspection. See, what are the things? Inspection and overall cost are generally expense. When it is generally expense, it will be shown in where? It will be shown in the income statement. These are repairs. Is it? Repairs and maintenance. Repairs and maintenance is expenses. Always. Okay. Repair. There, however, something which has to be capitalized. Is that? Which have to be capitalized. What is the capitalized? See the thing. Take the example. You have the cost. How much we have? Take the same example. 20,000. Okay. 20,000. You have this. You have went in 1/1/2003. 2 years has been happened. Is it right? 2 years has been happened. 10,000 is over. Is it? Now, remaining amount is how much? 10,000. Okay, remaining amount is how much? 10,000. Now, see the thing. Just like that, we cannot increase the life. Okay, we cannot increase the life. If we want to increase the life by revised life by 2 plus 2 years, here 2 plus 2 years, we have to take care of some overhauling of engine, something we have to replace engine, we have to replace interiors, we have to replace some body paint will be there. Is it right? Body paint, we are making a paint. Paint we will not do for every time. Once in a 10 years, once in a 5 years, we will do the thing. That if that is happening, then what will happen? The cost of asset, is it right? The cost of asset will increase. By making repairs and maintenance, it will not increase. How it will increase? You are changing the engine. You are changing some internally, some major part you are making spending. Then it should not be shown in the income statement, but it has to be shown where? It has to be shown in statement of profit, statement of financial position, balance sheet. Is that? It has to be shown in the statement of financial position in the balance. Okay, that is only the thing. Now, when you are spending it, again we have to capitalize, means you have to add to the value of the asset. Is that? Capitalize means we have to add value to the value of the asset. Expense means we have to deduct it from your income. Two different things are there. Expense means you have to deduct it from the income. Capitalized means we have to add it to the value of the asset. Where this is the case, then depreciation over the useful life until the next inspection or overdue. Means then we have to calculate depreciation on. Now what we have done, we have not taken anything. We have taken only 10,000. If anything we are spending on paint, we are spending on engine, what will happen? 10,000 is the cost. Assume you are having how much additional cost? Additional cost is 5,000. This is the cost, painting, replacement of engine. Then what will happen? You will have the revised cost. Revised cost will be how much? 15,000 divided by, see the thing, you have the revised life will be. Revised life will be how much? 4 years. Is it? Revised life will be how much? 4 years. If that is the case, how much you will get? The revised depreciation will be how much? The revised depreciation is 3,750. All things, everything will happen. Is it? They will change their life, they will change the cost, and automatically what will happen? The depreciation will also change. Are you clear about this?
Yes, doctor.
Okay, next. See the thing. Little bit more interesting, okay? Now, an entity purchased an aircraft. See the thing, when here, what is the life? They mentioned life. How many years? 20 years. Okay, there is no residual value. Okay, there is no residual value. Residual value is 0. Is it? Divide the sentence. This is the first sentence. The aircraft has a substantial over. What they say it is for 20 years. Is it right? What they say, 5 years, at the end of 5 years, at the end of 10 years, at the end of 15 years, and the last one is 20. After 20 years, they will not do anything. Okay, they are doing what they are doing on at the end of 5 years, at the end of 10 years, at the end of 15 years. This is the second sentence. Third sentence, the aircraft cost is how much? 25 million. And 5 million of this figure is estimated to attribute to the economic benefits restored by the overhaul. Then what happened? The cost is how much? The cost is 25 million. Okay, that cost. Every year, how much they will say? They say that they will have how much cost? They have a cost of how much? 5 million. Okay, they have a cost of 5 million. Of this is estimated to be attributed to how much? It is estimated to be attributed to the economic benefits. Is it? Means 5 years. Is that estimated to attribute to the means 5 years, 5 million is going to be what? 5 millions is the expenses. Now expenses is in terms of what? Expenses in terms of depreciation. Is it? Expenses in terms of depreciation, expenses in terms of other expenses. In year 6, okay, in year 6, the cost of overhaul is estimated how much? 6. Year 6, at this is end of 5 years. From here you will start 6th year. Okay, you will start from here 6th year. Is it right? 6th year. How much is the amount they are spending? They are spending how much? 6 million. Is it right? They are spending how much? 6 million. Now, what happens is, so many things are there. Is that? So many things are involved. The first thing is, what is involved is, we have to calculate the depreciation. Is that? We have to calculate how much is there. It is 25 million. Is that? How many years? It is 25 million. In 25 million, what is the cost is involved? 5 million. Is that what is the cost involved? 5 million. Means when you have the cost, is that I will not do anything here. The aircraft is treated as two separate components for depreciation. The aircraft is two separate components. What are the separate components? The separate component is, one is for how much? One is for 20 million, one is for 5 million. They have purchased the aircraft. See, when you are purchasing the aircraft, you have to do some painting, you have to make interior decorations as per the airline system. As per the airlines style, airlines designing, you have to do it. They have cost 25 million and 5 million is estimated to the economic benefit that are restored to the by the overhauls. Means two components are there. The first is for 20 million, the second is for the, if you add these two, how much is there? The cost is how much? 25 million. The cost is how much? 25 million. Now, if the cost is 25 million, they made it separately. For 20 million, they have divided by it for how many years? 20 years. How much you got it? 1 million. Okay. Now, they have invested, they have spent 5 million. It's not every year, it is one time, every 5 years. Every 5 years they have spent how much? 5 million. This is for every 5 years. Okay, this is for every 5 years. How much they are getting? They are getting 1 million. Means from year 1 to 5, for year 1 to 5, there are two things are there. One is cost, one is overhauling. Okay, one is cost, one is overhauling. We cannot take all at once. See, we cannot take 5 million in. We have to divide this 5 million for how many years? We have to divide this 5 million for 5 years. We have to divide. Now what happening? Overall is 1 million. The depreciation is 1 million. The total depreciation charge is how much? 2 million. Okay. This happens from 1 to 5. After 6 years, after 5 years, this amount has been changed. This amount changed from what? This amount changed from 5 million to 6 million. In the year 6, the cost of the overhaul is estimated to be how much? 6 million. The cost of the overhaul is estimated. Now, this is remaining same. This is remaining same. 20 million divided by 20 years. Now you will understand. Whereas this is not, previously we have taken how much? 5 million. Now you have to take how much? You have to take 6 million. And this is happening every 5 years. This is happening every 5 years. If this is happening every 5 years, we don't know what happens in the year 11. Okay? We don't know what happens in year 11. Means how much is there? We are getting an overall is how much? 1.2. Aircraft is becoming older. You have to spend more. You have to spend more. In the beginning, you have spent 5 million for 5 years. In the next 5 years, you are spending how much? 6 million. Again, this 6 million has to be divided for how many years? 6 million should be divided for 5 years. Next 5 years. This is the next 5 years. How much will get? 1.2. 1.2 depreciation is normal. Depreciation we are not going to change. The depreciation per annum is nothing but this plus this. Is it clear to you? Silence means it's not clear to you. Yes? Hussein, Salim, Sumaya and Mazin.
Clear, doctor.
Okay, fine. Okay. Getting my point? See the things. I will just take another minute for this. I will not take that much. I will take just minute. How many? See, this is the 25. In 25, you have two things are there. Okay, you have two things are there. The first one is 20 million and the second is 5 million. This 5 million is not what? This 5 million is 1 to 5 years. Is it? This you have divided, this you have, this is because it is, this you have divided for 20 years, this we have divided for 5 years.
5 years.
Okay. Next, subsequently what happening? Subsequently what happening? You will have another one. Is it at 1 to 6, 6 to 10 years? Is it at 6 to 10 years? You are spending how much? 6 million. Again 6 million will be divided by how many years? 5 years. Because the duration is only 5. It comes to how much? 1.2. Is that? It comes to, is that 1 point. Depreciation is 1 million. Your overhauling charges is how much? Overhauling charges is 1.2. Fine? Is it okay?
Yes, doctor. Clear.
Okay, no problem. If little bit doubt is there, slowly that doubt will be removed, that clarified. Okay. What is revaluation? Revaluation of the, see, you are having a buildings, you have a buildings. Is it? When you will have the buildings, is it? You will have the buildings. Definitely there is possibility 20,000. There is a possibility that the building value will increase. There is a possibility that the building value will decrease. Is it? There is a possibility. Revaluation means how we have to calculate depreciation on reval. IAS 16 allows choice of accounting treatment. There are two methods is there. The first method is a cost model. The second method is revaluation model. The first method is cost model. The second, what is the cost model? Cost model is simple. What is the cost model? Valued at cost less accumulated depreciation. Is that what they are saying? Cost we have done in the previous question, in the previous chapter. Is that they will give you a cost? Is it right? They will also give us accumulated depreciation. Is that? This they will give in debit column, this they will give in credit column. I am taking an example of 6,000. Okay, I am taking an example of 6,000. If you are doing this, this is going to be what? This is going to be the cost model. Cost minus accumulated depreciation. Is it? What is the revaluation model? Revaluation model is when you revalue the assets. Okay, when you revalue the assets. See the thing. You have the cost is 20,000. The life, is it right? The life is going to be 5 years. Okay. Now, fine. Okay. Now you have taken an asset saying that it is for 5 years. Is that? In between, after 3 years. Is it right? After 3 years. Now you have to tell me, it is a straight line method. Is it right? It is a straight line method of depreciation. How much is the depreciation for 3 years? Accumulated depreciation will be how much? Accumulated depreciation for 3 years will be how much? Tell me fast. $20,000 divided by 5 times 3 years. How much you will get?
$12,000.
12,000. Is it right? 12,000. Now, what is the carrying amount? Carrying amount is how much after 3 years?
8,000.
How much? 8,000. Okay, 8,000. Focus here. Automatically you will get. Is that how much is the focus? 8,000. Fine. Now you have revalued it. Is that you have revalued the asset. You say that the revaluation after 3 years. Is it after 3 years? The revaluation is going to be how much? Assume the revaluation is going to be 12,000. Is that after? Remaining life is how much? Remaining life is going to be how much? Remaining life is only 2 years.
2 years.
Now when we do, now again you have to calculate what? You have to calculate revised depreciation. Is it? Revised depreciation is nothing but revalued amount. Is it right? Revalued amount divided by the life. Okay. Revalued amount is how much? 12,000. Life is how much? 2 years. It comes to revised depreciation will be how much? Revised depreciation will be 6,000. Is it right? Revised depreciation will be 6. Means if we have revising the value, we have to calculate on the revised value. Okay. If you are, see, yes.
If there is a residual value, will be reduced from revaluation?
They will give you that information. Is it right? They will give that information. Usually they will not make things complicated. Understand point? They will not make things complicated. Never. Is it right? Never. They will not make things complicated. So that is the reason. They will not, very few cases they will give residual value. I have done so many times, so many questions. If residual value is given, nothing will be, for no further calculations. And most of the time there will not be any residual value. Okay? Is it okay? They will not give residual value. If they give residual value, they will make it very clear that whether the residual value will be considered, whether the residual value will not be taken, the message, the information will be clearly given. Okay, that is the reason. From the beginning, what they are mentioning? They are mentioning no residual value. Is it okay? Is it clear?
Yes, doctor.
Okay. Now, property, plant and equipment may be carried out revalued amount. We have taken revalued amount. Less any subsequent means any further. Okay, subsequent means after depreciation. If the revaluation alternative is accepted, adopted, there are two conditions are there. Okay, two conditions. Revaluation must subsequently made with sufficient regularity. Is that to ensure that the carrying amount does not differ materially from the fair value. What it says, the rule, if we are doing revaluation, you have to do revaluation every time regularly. This is very important point. This will be used in MCQ regularly. You cannot say that you have a land. I will say that I have done revaluation on 2022. Then I will not do as per my convenience. You have to do revaluation every year. 2023. You have to do revaluation 2024. You have to do it continuously. You cannot say that I will do revaluation as per my choice. Nothing is there. Rule is rule. Very important rule. You have to do it on a regular basis. First point. When the item property is revalued, the entire class of assets must be revalued. You remember this, you write down this. These two are very, very important. You will cover in auditing, you will cover in SBR, everywhere you will cover. Two things are there. When you do revaluation, you have to do revaluation every year, regularly. First point. Second point, if you are doing revaluation, assume property, plant and equipment. You have property, you have plant, you have equipment. Is it right? In the property, you will have land, you will have buildings. Is it right? I cannot say that I will do revaluation for land and I will not do revaluation for buildings. No. If you are doing revaluation, you have to, that they said, entire class of assets. Is it right? The entire class of assets to which the items belongs must be revalued. Means you have to revalue all the things. If you are not doing revaluation, you have not started revaluation, nothing will happen. But once you start doing revaluation of the property, plant and equipment, you have to do revaluation regularly. First thing, you have to do revaluation for all the assets. These two things has to be, see the thing, wherever there is a must, you cannot compromise on that. Here they said, two conditions must be compiled. Is it right? Two conditions must be complied. This is one of the basic rule of IAS 16. And this rule will be used in most of the cases. Is it right? In most of the cases. Are you clear about this too?
Yes, doctor.
Fine. What is the procedure? Where the difficulty, I will tell you difficulty. Okay, where there is a difficulty, I will tell you difficulty. Follow the rules, nothing is difficult. Restate, you have to revalue the cost to new value, new valuation. First thing, you eliminate any accumulated depreciation. You don't take depreciation, what happens? Is that eliminate any accumulated depreciation. Then show total increase. Where we are going to show it? We are not going to show in normal income statement. We are going to show where? We are going to show in OCI. Okay, we are going to show in OCI. Now slowly you will understand the concepts. Okay, is at the OCI in the profit and loss account and will be taken to the where we are going to show in the retained earnings. Means you have to revalue you have to take the new value, you have to eliminate the accumulated depreciation, and you have to show in where? You have to show in the OCI, other comprehensive income and retained earnings. Fine. Now, when you are doing this, they will ask you to write journal entry. This is little bit more specific. Expenses, debit expenses. Okay, debit expenses. Okay, now what will happen when you are doing the revaluation? Is it right? When you are doing the revaluation, the value of the asset will increase 99%. Okay, in most of the cases, whenever there is a revaluation, is it right? Whenever the asset value will increase. If that is the case, is it right? I am giving you a shortcut in the box. Okay, when asset increases, it should be debit. Is it? When asset is decreasing, the asset value is decreasing, it will be credit. Okay, if it is asset increasing, debit. Asset decreases, credit. Expenses. Is that accumulated depreciation? Is it that accumulated depreciation is an expense always it will be debit. Debit all expenses and losses, credit all incomes and gains. I told you in the beginning, first chapter, first slide. Is it right? Next, OCI. Is it right? OCI, revaluation surplus. Is that OCI? Always revaluation surplus. Sometimes it will be loss. Okay. Sometimes it will be loss. Okay. Sometimes it will be. If there is a gain, it should be what? It should be credited. If they ask in the examination, they will ask 3 or 4 journal entries, and journal entries we have to write. Okay, we have to write 3 or 4 journal entries will be there. Even in some cases they will ask in MCQ also. Is it right? See the thing: debit non-current assets, cost, valuation, revalue. Means debit means the asset value is increasing. Is it right? The asset is increasing. Always debit. Accumulated depreciation, it is an expense. Is that expense? Debit all expenses. Debit. Is that other comprehensive revaluation surplus? It is going to be. It is a income. Other income. Okay. OCI. It should be credit. Is it? Now, what I suggest, what I advise, when you are thinking about ACCA, make it sure debits and credits you should be perfect. I will not say you should, you must be perfect. If you are getting expert in this, other things are piece of cake for you. I am telling you very simple. Other things are piece of cake. Because the audit is on debits and credits only. Initially it will take time, but we follow the rules, things will work. Okay, are you clear about this?
Doctor, I have a question.
Yes.
Where revaluation will be loss, how will be the journal entry?
Revaluation will be?
Loss, not gain.
Revaluation will be loss. If revaluation will be loss, debit revaluation loss. Credit will be what? Credit will be non-asset. Because asset value is decreasing. If asset value is decreasing, it should be credit. Good. You ask me. You ask questions, it will be more clarified. Because debit, what is we have to follow the rules. Is it right? What is the rules? Debit all expenses and losses. Because debit all expenses and losses, we are debiting revaluation loss. And asset value is decreasing. Whenever the asset value decreases, I have mentioned here, when the asset value is decreasing, it should be credit. Is it okay? Tell me, any doubt is there? I am here to clarify.
Clear, doctor.
Okay, revaluation loss. Anything is there, you stop me. I am here to make sure things will. Now, they are saying this, we will cover this. Revaluations gains are recorded in OCI. Okay, revaluation gains either within the profit and loss account or OCI. Okay, this gain is carried within the statement of changes in equity. Is it revaluation surplus? In revaluation surplus, we have done a separate column will be there for revaluation surplus. Is it? This revaluation is a capital reserve, and you see the things. Listen carefully. In the examination, they will ask this type of question. Revaluation capital reserve is not permitted to be distributed to the shareholders. Means this amount is not used to be permitted to distribute the shareholders as what? As dividends. Means this amount will not be used to pay dividends. Okay, this is only revaluation amount. Actually, there is no money. There is no money coming and going out. It is only your assumption. You are increasing the value. Is that in that case you cannot pay this amount as a dividends. Fine. Very important. You just when you are doing my MCQs, you can understand what I am saying. Okay, we will cover this. We will recap. We will put this. I will put it in purple color. Okay, I will put it in purple color. It means it is going to be referred while doing the MCQ. Revaluation. Now you say revaluation losses. You are talking about this, which represents a impairment of the asset value. What do you mean by impairment? There are two things. Okay, there are two things. We cover this in the next lecture more detail. Okay, there is a impairment. Is it right? There is a impairment and there is a amortization. Impairment is, it's like this. Impair means you are not hearing. Is that impairment is the asset is not responding. The value of the asset is decreasing. Is that the value of the asset is decreased? There is no response from the asset. Is it a revaluation loss? Sometimes technology items, value of the asset will decrease. Buildings, land value will increase, building values will decrease. Impairment. Okay? Impairment. It is called as a impairment. Is recognized in profit and loss account. Okay, another very important point. Is it right? When the revaluation loss arises, previously revalued asset should be deducted first. Now, you asked me, is it? No. I will tell you, I will give you very clearly. You will have an asset, okay? You will have an asset. You have the asset for 5 years. You made a revaluation, is it right? You have a revaluation. You have a revaluation gain, okay? You have a revaluation gain of 5,000. Now you are doing again revaluation. When you do the revaluation, is it right? When you do the revaluation, you will get a loss. Is it? Now, already you have in your account revaluation surplus, is it right? Already in revaluation surplus is how much? 5,000. But now you are doing second time revaluation, it is a loss. When there is a loss, the rule says two things. First, if any balance is there, you have to deduct from that balance. If any balance is there, I am saying if any balance is there, first you have to deduct it from balance. Is that? That's what it says. What it says, it should be first, deduct first from the previous gain. It has to first deduct it from the previous gain. Then you should show OCI. Is it? Now, is that is the first rule. Any excess impairment will be recorded as impairment in profit and loss account. Is that first you have to take the balance, if any. If any, then you have to take it from the previous balance. If still it is there, then you have to take it into the profit and loss account. First you should not take it to profit and loss account. Okay? First you should not take it to the profit and loss account. So first you have to take the revaluation. If any balance is there, fine. You have the balance. Assume revaluation loss is how much? Revaluation loss is 6,000. Is there? Already you have revaluation gain is how much? 5,000. Means you will take 5,000 and you will make this account as 0. Then what you will do? You have still 1,000 is there. This 1,000 you will take in the profit and loss. Now I will give you another option. I will give you another option. Assume or you have only 4,000 is revaluation loss. Is that you have only 4,000 is the revaluation loss. What you will do? You will take 5,000, you will deduct how much? 4,000, and still you have a balance of how much? 5,000. Is that still you have a balance of, if in future, if maybe there will be some additions or maybe there will be some adjustments. Is it? In future there will be some adjustments plus or minus. Means what is the rule? They say if there is any revaluation loss, okay, if any revaluation loss, it is going to be identified as an impairment. First you have to take it to the previous gain, then you have to take it to the profit and loss account. Directly we should not show in the profit and loss account. Is it clear to you?
Yes.
These are rules. Understand? Sumaya, Salim, Hussein and Majin. These are rules. It looks small, but these are rules. Okay? Only these rules they will test. Nothing else. Only these rules. Fine. See the thing. You will have a small adjustment here. Is it right? You have the small question is given. An entity revalues buildings, decides to incorporate revaluation to the financial statement. How much they gave? The buildings is going to be cost is 1,200. Depreciation is how much? What? The building is revalued to how much? 1,400. Useful life is how much? 40 years. Okay, useful life is how much? 40 years. What they have said, what they are asking? They are asking only the extract, only that calculation, specific you have to show only the specific calculation, extract, and all the time they will ask you this only. Whenever you ask, you have to be very focused. Fine. Now what happens? They say that it has to be how much? It has to be depreciation. Is it right? How much is the depreciation and what is this is called as a carrying amount. This is called as a carrying amount. Now, how much is the depreciation they have calculated? How much they have calculated depreciation?
144.
144. Okay. Now, when they are doing the revaluation, what is the rule? The rule says that we have to calculate revaluation. We have to calculate depreciation on the revalued amount. Okay. We have to calculate depreciation on the revalued amount. Now, what is the value of what is the carrying amount they have mentioned? They have mentioned a carrying amount of how much? They have mentioned a carrying amount of 1056, but the revaluation amount is how much? Revaluation amount is 1400. Is it right? I have 1400 in thousands. Okay, 1400 in thousands. How much is the useful life is there for them? What is the asset useful life? 1,400 divided by how many years? Divided by
40
years.
40
Is it right? 1,000 divided by how much? 40 years. How much you will get? 35.
35.
Okay, how much is there? 35. Now, next, how much is the revaluation gain? Revaluation gain is how much? The value is how much? Revaluation is how much? Revaluation is 1,400. Okay. Now, what is the carrying amount? Carrying amount is how much? Carrying amount is 1056. Okay, carrying amount is 1056. Difference is how much?
344.
340. Is it? This is a revaluation gain. It is a revaluation. Now coming back to this. Okay, coming back to this. This is what happens in your income statement. Is it right? This happens in your income statement. How you have to show in the balance sheet? Is that how you have to show in the balance sheet? What is the revalued amount? Revalued amount is how much? Revalued amount is 1400. Now, what is the current year depreciation? Current year depreciation is how much? Current year depreciation is how much? 35. What is the amount you are going to show?
1,365.
1,365. See, is that? See, divide the things. This is step 1. Okay. This is step 2. Is it right? This is step 3. Whatever the revaluation gain you got it. How much you got it revaluation gain? You got revaluation gain of how much? You got a revaluation gain of 344. Is that revaluation gain you have to show in where? Statement of changes in equity under the heading where? Revaluation surplus. Understand? I am giving you a gap for you. 2 minutes. Understand? Step 1, we have to calculate revised depreciation and we have to show the gain on revaluation. Second point, in the assets, okay, in the assets, land and buildings, how much you have to show? Is that 1,400 minus 35, okay. Next, third step, revaluation gain, how much? 344. Is it clear to you? Understand. First understand the concept. You will get expertise the moment we will do practice. Test your understanding. The moment I will do test your understanding, you will not have any doubt. Okay, you will not have any doubt. Are you clear about this? We have to divide into the, see, if you are mentioning like this, it will be for how many marks? It will be for 2 marks.
Mr.
Yes.
When they will say extract, we have to show the depreciation and we have to show the what it called statement of financial position and equity.
Only this much you have to show. We should not show completely. Only this much you have to show.
We have to. All right. The second part also.
Yes. Step 1, step 2, step 3.
Step 2 and 3. It means we have to show where we can post the entry.
Yes. Is that where how it will be reflected in the income statement and balance sheet.
All right, clear.
The same thing they have done. Is it right? They have shown it statement of changes in equity. They have shown 3,000. Here what happened? There is a January 1st. This much is the amount. Revaluation gain is 344. Total value is 1500 and depreciation is 35. The December value is this is I am very much concerned about this carrying amount. Okay, the concept of carrying amount should be very, very clear. Okay. Is it clear? Mazin, Hussein, Sumaya and
Yes, doctor, clear.
Yes, doctor.
Salim. Fine.
Yes, doctor, it's clear.
Now the things. See the things. What they say depreciation. Once the asset has been revalued, the following treatment is depreciation should be charged on revaluation less residual value if given over the remaining life of the asset. The whole charge must be shown in the profit and loss account. Any annual reserves may transfer may be made to whom from revaluation surplus to retained earnings. The rule says that we should not pay dividends from this amount. For additional depreciation, charge to the revalued amount compared to cost. It says that under IAS 16, address to any differences in balance, is it right, between the gain and in the revaluation surplus and reduction in the retainer. Means if there is any revaluation loss, we have to treat it accordingly. Isn't it? The transfer will be shown in the statement of changes. What it says: debit depreciation charge, credit accumulated depreciation. Is it? Just work on, we will work on this a lot, okay? And revaluation surplus, depreciation on revaluation, definitely we will add more depreciation, is right? My depreciation on revaluation, and credit will be retained earnings if there is any income. Means there will be two general entries. Okay, the first one is depreciation to accumulated depreciation. The second one is revaluation surplus. Asset value will increase, is it right? Asset value will increase, debit, and it will be an income. We are going to give credit to the retained earnings. We are going to give to the retained earnings. Now we will do these things. You will have more clarity on that. First, read the question on your own. Before reading, make it a habit. First, read the requirements. Everyone, okay, everyone read the requirements. Prepare extracts of financial statement, extracts only, for the year ended 31st March 2009. Show how the accounting will be different if opening revaluation balance surplus does not exist. Point number 1 and point number 2. First we will do point number 1. Okay. Prepare extract of due financial statement 31st December 2009. Okay. First 31st December 2009. I will write from here, okay? Please write down the thing. When they have purchased on 1st April 2008, what is the value of fair value? Is it right? The fair value. I will tell about fair value at a later stage, okay? Not now. Is it right? How much is the property? Property is 100,000. Remaining life is how much? Life is going to be 20 years. Is it? What they have the policy to revalue the asset each year, every year. They said we have to do it on what? We have to do it on a regular basis. At 31st March 2009, okay, 31st March 2009 means after exactly 1 year. They have revalued how much? They have revalued it to 86,000. Is it? The balance on revaluation surplus, as that there is a revaluation surplus, balance is there. Is it? There is a revaluation surplus, balance is there. Already balance is there. Is it right? How much is the balance? 20,000. And it is related to this property only. X does not make a transfer to realized profit in respect of excess depreciation. Is that excess depreciation they have now? Now what happening? They have made for 1 year you have to make depreciation. Is it right? For 1 year you have to make depreciation. Is it right? This is the information they gave. Okay, this is the info. Step 1. Is it right? Depreciation from from 1/4/2008 to 31/3/2009. Okay, what they say? They say residual value. They say there is no residual value. Is it right? They say how much is there? I will write for this. Is that cost divided by life? Is that cost divided by life? What is the cost? 100,000. How much is the life? How much is the life? 20 years. How much is
20
the
years.
depreciation? 5,000. Is it right? Now, what is the carrying amount?
85,000.
Is it right? Step 2. Okay, step 2. Is that carrying amount is how much? Carrying amount is, I am writing very clearly. Is it right? Cost 1/4/2008. It how much? 100,000. Is it right? 1/4/2008, 100,000. Depreciation till 31st/3/2009. How much is the depreciation? 5,000. Carrying amount will be how much? Carrying amount will be 95,000. Carrying amount will be how much? 95,000. Now, what they have done? They have done revaluation. Is it right? They have done revaluation. Revaluation on 31/3/2009. Okay, how much the revaluation? They have calculated revaluation of how much? 86,000. They calculate revaluation on 86,000. Okay, I will not put brackets. Value has been increased or value has been decreased? Value has been increased or value has been decreased?
Decrease.
Decreased. Is it that value has been decreased? Is it value has been decreased? How much it has been decreased?
9,000.
9,000. If it is decreased, what we have to write? It is a revaluation loss. Are you clear about this? Is right? It is a revaluation loss. Fine? Revaluation loss. Now they have the revaluation balance is there. How much is the balance? Revaluation balance 20,000. Okay, already they have balance. You have the loss. If there is a loss, first you have to take it in the, you have to deduct from that revaluation surplus. Now, what we have to show in the income statement, step 3, extract. Okay, extract income statement, profit and loss account. How much will show depreciation? 31st March 2009. Yeah, tell me. How much will show depreciation? How much we have calculated depreciation? 1/4/2008 till 31st March 2009. How much we have calculated depreciation? 5,000. Is it right?
Yeah.
Okay. Now they have a, see, this is the normal. Okay. Now they have a, how much is the revaluation loss? Revaluation loss is how much?
9,000.
9,000. So is it right? We will not show here. We will show separately other comprehensive income. You can write OCI also. Nothing will happen. Okay? From OCI. What you will write in OCI? revaluation loss. How much is the revaluation loss? How much is the revaluation loss?
9,000.
9,000. Is that how much is the revaluation loss? 9,000. Fine. Are you clear about next? Is it okay? Are you clear about step 1, step 2 and step 3? Please tell me again. Step 1, we have calculated depreciation. Step 2, we have calculated revaluation loss. Is that step 3, we have shown in the profit and loss, how it will be reflected in profit and loss account. Step 4, okay? Step 4 will show what will be in the statement of financial position. Okay, we'll show statement of financial position 31/3/2009. Okay, 31/3/2009. It comes where? It comes in only we are showing this one, non-current assets. Okay, how much is the property? Property is how much? They say property, is it right? Revalued amount. Is it right? Revalued amount. How much is the revalued amount? Revalued amount is 86,000. I am putting one line separating. Okay, revalued amount is how much? 86,000. Okay, nothing we are going to show anything else. Is it right? We are not showing anything else. Next, in the statement of changes in equity, is it right? In equity, where we are showing revaluation surplus. Is it right? Revaluation surplus. How much is the balance they gave? They gave 20,000. Is it right? How much is the revaluation loss? Revaluation loss is how much? Revaluation loss is 9,000. How much is the balance? It comes to 11,000. Four steps. Are you clear about this?
Yes.
Step 1, step 2, step Hussein. Is it okay? Sumaya, it is okay?
Yes, okay.
Salim.
Yes, doctor, it's okay.
See, the best part is we are doing the same process again and again. Okay, the moment we are doing the same thing again and practice, it will make perfect. The rules will never change, never ever change. Understand? Rules will never change. That is the reason. Focus on rules. Follow the rules. Very simple process. Okay, focus the rules. Now, what they are saying? They are saying that where is that? Yes. They are saying that if this is with respect to part 1. This is with respect to part 1. What the rule they say? If opening balance is not there, is it right? If opening balance is not there, where we are going to show it? Is it right? Where we are going to show it? If opening balance is not there, what the rule says? Go back to the rule. Okay, go back to the rule. It is there somewhere. Is it right? Where is that? Yes. Rule says that if any excess impairment will be recorded in the impairment of the statement of when represents asset. When a revaluation loss arises on previously asset, it will be deducted first against previous revaluation gain and then be taken to OCI. Any excess impairment, this is very important, any excess impairment will be recorded as a impairment expense. Where we are going to show impairment expense? In profit and loss account. We don't have surplus, sir. We don't have surplus. When we don't have surplus, we have to show it where? We have to show it in the directly. When there is no surplus, we have to show in profit and loss account. Okay, we have to show in profit and loss account. Is it? Now, it is how much is there? There is a impairment loss. Impairment loss is how much? 9,000. Is it right? Impairment loss is how much? 9,000. No revaluation, no revaluation surplus. No revaluation surplus. Follow the rules, okay? If that is the case, in profit and loss account, is it right? In profit or loss account, is it right? Directly in profit and loss account, what we have to show? We have to show it as a impairment. Impairment loss. How much we have to show impairment loss? 9,000. When we are going to show it? When there is a no revaluation surplus. Is it okay? Is it okay?
Yes, Director.
Okay. Take once class is over, once your futur is over, once prayers are over, 5 minutes, just 5 minutes before you go for bed, I will send you this file as incomplete. Chapter 2 incomplete. Just revise this chapter. Okay, just revise this chapter. Don't revise. Automatically it will make things easy. Okay, and what we are doing here, next we are going to continue on the same case. Okay, with the rules will never change. Now I am asking you, can I continue the test your understanding? Yes, I should stop. Whoever tell first, I will take that one.
Stop.
Fine. That's is that. Are you clear about this? See, fine.